And we're on. Good evening, everybody, and welcome to Trader Talk Radio, presented by Actions to Wealth. My name's Ainslie Clubb, and I am your host for this evening. As always, we have a lineup of internationally acclaimed, well, just international.
Speak for yourself. I'd like to be acclaimed.
All right, so you're acclaimed in Singapore and the UK and Singapore. So that makes you internationally acclaimed, Julian. So
I am a hero in my own lunch hour.
Spoken so well by somebody in which month of you of lockdown?
I don't know, about month 86. So at some point I'm going to start to get to put ponytails in the back of my hair, because I'm at the point now where I'm at. So in New Zealand we obviously don't do lockdowns by half. So when we do a lockdown here, it is literally going into your bunker and sitting there and doing absolutely nothing, and you're only allowed postal deliveries from FedEx. So we can go to the supermarket, but that's it. So basically no hairdressers, guys, which is the biggest problem. No opportunity, because it's not essential items, to buy clothes. Although strangely, I did manage to get my new golf club putter turned up. So really beats me. This is the way life works in New Zealand. But the point is, I apologise to everybody for my lack of dress. I am appalling, and I have no clothes, and my hair is awful. So I will. Best we start talking about the world of trading, I think, and move on very quickly.
Over to you, Julian, and let's go and do a macro look.
Okay, so guys, look, thank you very much. Welcome everybody, wherever you are in the world. As always, you have a quick macro roundup for me. For those of you on my previous show, we spent 45 minutes going into things in slightly more detail, just having a quick scoot around the world. I think two things I want to talk about today is, number one, the fact that the US dollar is quite strong right now, and maybe there's a really fundamental reason for that. And the second one is, I just can't help myself. Sorry, Ainslie. I need to go look at the oil market and just look at the long-term seasonal patterns in the oil market to try and get a handle on what's happening next, because I was just talking to people about what a contango and a backwardation means. Now, guys, if you don't know what either of those means, you need to look at the previous show when the recording comes out. I go through it towards the end and tell you what a backwardation and a contango is and why it matters, right? We'll talk about that in a second. So quick, look, here's the rundown, right? US dollars. Why is the US dollar rallying? Well, many reasons. One could argue a flight to quality out of stock markets. So people are selling their US dollars, their US dollar stocks, and God knows what they're doing with them. I don't know, sticking them in the bank account. But that flight to quality normally means that people panic, and when they panic, they liquidate positions, not just in US dollars, but everywhere. And so when you sell things everywhere, you tend to go home to your base currency, and that's often US dollars for people. So flight to quality, US dollar rallies. And you sort of go, well, yeah, I can sort of buy that, but it's a bit more difficult these days to try and define what a flight to quality is, because sometimes it's a flight to Ethereum and Bitcoin, as we well know. So here's the thing, right? Why don't we look at this from a much more simple angle, and we'll say, here's, when we go and look at charts, what's been happening, right? So quick hands for those of you who are on the chat. Who is on the chat? There's one or two people out there. Guys who are out there, tell me what you thought the oil price was about a year ago. Does anybody know or have a guess? You don't even have to get it vaguely right. Just give me a reasonable number compared to where we are now. Can somebody please help me? Zero, Gary. Probably not a million miles away from it. I think it was slightly positive, 40-ish. Why don't we just take the average between 0 and 40 and come up with 20? What are we looking at today? The current price today is around about $80, right? So what does that mean? Oil is at least 3 times what it cost last year. So why is this important? Well, funnily enough, all the commodities in the world, the vast majority of them are invoiced. All the transactions are invoiced and settled in what currency? It's US dollars. Okay, so when the price of oil goes up, what do you need more of to pay for it, right? You need more US dollars. When the price of gas goes up, what do you need to pay for it? You need US dollars. When the price of coal goes up, and my God, guys, you should see the price of coal. Let me just show you that. I've got to share my screen because this is so impressive, right? You think Bitcoin's impressive. Coal has nothing on what coal has been doing. Let me just show you where coal has been going recently. Here we go. Okay, I'm just going to go to This is good old technical analysis here. We're going to go to something called a line chart, guys. We don't often show these on the screen, do we? So a year ago, here was the international price of coal down at 51 US dollars. Where are we today? 228 US dollars a ton. That means if you are buying things in US dollars, you are paying 4.5 times as much as you paid last year. That means you need quite a few dollars.
Are you sharing the screen?
Oh no! Oh my God! Sorry, I didn't press the magic button.
Thank you.
Thank you, team leader. Brilliant. This is why Ainslie is in the show with me tonight. It makes my life a hell of a lot easier. Now you see what I'm talking about, guys. Look at this. Now you can see that on the screen. That's coal futures on the screen, right? How impressive is that? I don't need to put a chart of oil up, but just to make everybody happy, that's exactly what I'm going to do. Okay, so this is what the price of oil has done over the last year. Vaguely about $20, as you guys estimated, all the way up to 75. You need US dollars for that. So is it surprising when we go and look at what has been happening to the euro the last few days? And I'll come off line charts, go back to our old friends, the bars, right? Go and look at the weeklies on this. What is going on the weekly charts? You can see this is the rally in US dollars. And over here, since the euro peaked in the beginning of 2021, in fact, think about this. With that extra demand for dollars, the other currencies have gone nowhere in the course of the last 9 months. How much stronger would they be if things weren't priced in US dollars? This is why guys, is why quantitative easing is difficult to understand, because you look at this and you go, well, I don't understand, because quantitative easing, they put 4 trillion into the market. The dollar should be going down. Of course it should be going down, but you forget the golden rule. The golden rule is you've got to pay for everything in US dollars. So that's the reason why it isn't going down, because all those commodities are going up. Okay, guys, quick scoot around. I literally have about 5 seconds to finish this, right? So here's the thing, the seasonal pattern in oil. What are we looking at here? What happens in oil? First half of the year, bullish. What happened this year? First half of the year, oh my God, didn't that work as a trade, right? This has been a bullish pattern now that everybody's seen coming for the last 40 years. Why is it still working? Because it does. Okay, what happens from about May onwards, May through to July? What happens is the market consolidates. That yellow box you see in front of you, what's going on? Nothing. And that's really quite important. What happened is he went up, he went down, we went up again, and here we are. Decision point exactly this week is when the seasonals turn down for oil again. I'm sure Ainslie will fill you in on the daily pattern around this. Okay, but what is really going on is we are sitting here at the all-time highs. Why am I so not excited? I'm so not excited by the all-time highs. It's where sellers showed up last time. Let's have a quick look at what this means, right? Whilst the price has been rising, the volatility has also been rising. That's quite unusual. It's really unusual. That doesn't often happen. Look at this volatility going up here. Okay, so price rising, volatility picking up. Okay, what does that mean? That shouldn't happen in a bull market. Volatility falls, because it just steadily increases. But what we're seeing here is more violence, ups and downs, and okay, so there's something odd going on. People may be distributing price here. We may be seeing this. So all we've done with oil is go back to where sellers showed up before, right in front of the seasonal cliff. So here's the thing, right? When you think about this and what the future is going to be, what does it mean? For the next 3 or 4 months, it's a bearish time for oil. That doesn't mean to say it's going to go down, guys. If you think it's going to go up, you see a great buy signal, think about this from a seasonal point of view, control your risk. Don't put as much on, right? If it starts to go down, that's when you can load up and think about more aggressive stance, because it's in line with the seasonal pattern. That's my 2 seconds on the macro overview, which isn't really a macro overview. What I really was doing was talking about what's going on in oil and a couple of other currencies. I hope people are helped up by that explanation. Go the US dollar. While everything keeps going up, the US dollar is going to go up with it. Who cares about quantitative easing? It's a load of rubbish anyway.
Thank you for that insight, Jules. That was really, it was great.
You see, what happens, guys, is Ainslie never comes into the show this early, so she never seems to be getting quite excited. This is me getting quite excited, and what's more interesting is my hair's flopping around to make it even more melodramatic as well too. So this is the trouble with long hair. If it was shorter haircut, I would look vaguely more sensible. So here's the thing, guys. Good luck next week, and thank you all for listening.
Thanks, Julian. Okay, Ash, we don't have an Alexis this week, so we're going to have to go straight to you, buddy, with what's happening in the commodities, in the COT data.
The COT data. Well, data, I should say. Almost, I got into the way you say things. The COT data is.
Here we go. You say tomato, I say tomato.
You can take the guy out of Brighton, but
there's no R in the word, Jules. There's no R in the word, so I'm going to stick with data. No, so yeah, pretty much the same as last week, actually. So
okay,
what we've really seen is lots and lots of support for the Australian dollar, and I find what Jules is saying quite fascinating, because I think what we've seen over the last few weeks is an indication that there is some unease in the stock market. But that unease, okay, yes, we have seen a bit of a pullback. But if you're comparing stock markets across the board, and Jules is absolutely right, what you'll normally see is if the S&P, the Dow, and the Nasdaq start to get any kind of snivels, then the rest of the world tends to get a cold, and that's not really happened in the UK and some of the other markets as well. So there's a bit of a disparity going on right now with stock markets, and this turning point, and it could be a turning point. We're either going to go into consolidation, or we're likely to come down, and I think we're all looking for it to come down, but it's taking a little bit longer than I think many of us assumed that it would do. Now with the Australian dollar, you can see here the Australian dollar is still 36-month index 100%, 18's 100%, and 6 months is 100%. So this tends to be a risk-on currency. So, you know, oftentimes when the equities do well, the Australian dollar will do well as well. And we're still seeing lots of buying going into the Australian dollar. You know, that isn't fading over the course of Tuesday to Tuesday to Tuesday to Tuesday. So from last week's print, we're still seeing that support in the Australian dollar, effectively saying that the value of the Australian dollar isn't there yet for it to start to ease off or start to come back. So and this may well be just down to the fact that the anticipation of lockdown could be lifted, and then we start to see the Australian dollar spring back to the upside, or it could be more of a global indication that things aren't maybe as bad or a bit early if we're expecting a big downward moves in the stock market. So Australian dollar still showing lots of positivity, and then we flip to the US dollar, and it is the opposite. Now look at the longs. The longs last week did increase by 84%, and the shorts only increased by 7%. So there is this is a huge jump. This is a number that you very, very rarely see. So even though the COT data is saying here we are, 0% on the shorter term, 22%, so just above where that bearish kind of signal starts to come into play on the COT data. Even though we're seeing this selling, the percentage move in dollars is actually all to the upside. You know, it's starting to filter back through to the upside. So this again goes back to the original point of this kind of this wedge that seems to be involved right now in people's perceptions and people's sentiment, where it could be a very, very tricky time to trade. You know, when you start to see these numbers and they're just out of sync with other things, then it can indicate that we are at a potential turning point, and it does become a more difficult time to trade. And you can start thinking, okay, I've got a great price, I'm ready for the whatever I'm trading to start really moving, and then it just doesn't. It flips around, stays in its range, and starts to come right back at you again, even though it might have gone through the range for a very short period of time. So indications here are be very, very wary of selling the dollar, and due to that, be careful of buying up the Australian dollar just because this is all at 100%. Now, the last one I'm just going to touch on here is gold. And the reason I think gold is now becoming of interest is the shorter term indexes on the COT suggest that there is some buying going on with gold. And we did see a half decent rally back up to the trend line with gold. We have to use the price action. have to make sure that we are still trusting the price action. Behind the scenes, however, it is suggesting that we could, if we can get the price action which starts to break through levels, we could start to see a bit of a rally from gold, and maybe it's not all doom and gloom and starting to thunder to the downside as we initially thought. So I think for this week, we're going to keep our eyes on the Aussie dollar. We're going to keep our eyes on the US dollar, which is effectively going to cap everything, and we're going to keep our eyes on gold. US dollar starts moving to the downside, then the obvious choice here is to go to the Aussie in accordance to COP. The US dollar starts going to the downside. Another obvious choice could be gold as well. Let's just bring in the seasonals and finish up by seeing what they suggest. On the Australian dollar, it does suggest a pretty good rally right the way through October, coming down around about the third week, but then picking right back up again until around about November. So a weaker dollar could encourage us to go long the Aussie. Now, of course, we don't have to trade against the dollar, so we could be using looking at this against something else. And even though you might start to see some dollar strength, the Aussie may well still be the second best currency out there. So we can look at that. Now let's have a look at the dollar and see what that suggests seasonally. And it looks like it could be getting a little bit sticky around here in October, possibly coming down a little bit, nowhere near as low as it has been, but coming down a little bit. But then again, starting a pretty good rally around about the third week of October. And now this also kind of says to me, seasonally, time to be very, very cautious on what you're trading. And all that means is, don't necessarily expect it to just blast off. You may have to switch to some shorter term time frame strategies to make some money this week and in the next couple of weeks. Finally, we'll have a look at what gold's seasonal pattern is, and gold did not follow the most recent seasonal pattern. Tends to be kind of flat right the way through to the middle of November before it does start a rally again. So if it follows the seasonals, we could be getting some choppy price action, but we should watch out for that, because if gold can hold in this area, then it starts to become interesting towards the end of the year. So that's what I will be looking at currently, Ainslie. I'll be checking out gold more for maybe stability, not necessarily for a trade, but for some stability. Checking out the dollar and of course, because the COP data is so strong, checking out the Aussie as well for some upside.
Just on the Aussie dollar, only because I take a bit of a personal interest on the Aussie dollar.
Yeah.
China during the week, towards I think it was Thursday, had made an announcement. You know how your utilities in the UK are under a little bit of stress?
A lot of stress right now. Yeah,
yeah.
UK's in all sorts of trouble. Yeah.
Yeah. So 10 major or 10 minor utility providers in the UK have all gone bust in the last 2 months.
Yeah.
China's not far behind. They are in a pickle as far as their utilities and resources. And there has been a government directive that was announced on Thursday, which you may have seen the result in a push up on oil and gold at the same time. For the Chinese government gave a directive for resources to be adequately provided to the utilities at any cost. So when you've got that, and you've got sort of like, one of the largest trading partners that we've got as far as iron ore, coal, etc., is Australia. I think you might find that little Aussie dollar will do pretty much what's happening on those charts there and have a bit of a bounce. So just in line with what you were saying on a seasonal and on the seasonals and on the CUP data, fundamentally with what has happened, it's transpired in the last 24, 48 hours of trading at the end of last week, we saw a lift in the Aussie dollar. So I wouldn't be surprised to see that follow through during October. Right.
Interesting point.
Yeah. So
I'll look out for it.
And as for gold, oh my lordy. As I said, we had a bit of a chop and we had a bit of a boost during the week on that Chinese information or that Chinese news, and but we are definitely coming into that choppy change time for the rest of
it's got to hold, isn't it? It's got to prove itself, I think, and I think it would be enough to say if it holds I think I'd be okay with that. I don't mind if it goes nowhere, as long as it doesn't go down. I'd be pretty bullish on gold.
Yeah, look, and I always get to that point where if the setup is there, and at the end of the day, our seasonals are they're only biased. And gold hasn't played ball very much at all with seasonals, especially for the post-presidential election year. Hasn't really played ball. There have been a couple of places during the year it's gone, I am going to play today. But it hasn't lasted very long. And all of a sudden, you get really excited and you think, okay, today is we're off and running, we're at the races, and then it just turned around and gone absolutely back into its box. It's just gone back and consolidated. So there are a lot of factors at play, far more than there were before. And I'm hoping if Shukri is in, we'll have a look at perhaps where alternative money has gone to hedge things like inflation, etc. But just at the moment, I'm going to carry on with just an insight onto gold. Am I up next, Shukri, or are you going to go with Bitcoin and explain what happened?
You can go on gold first.
I'll go on gold first, but don't you go too far away, because I want to know what happened on Friday with just before the close of trade. Well, close of New York, and that's all I see. I don't know whether it's kept going or not, but yeah, I'll have a chat on. Thanks, Ash, and have a chat to you about that very soon. So let me just have a quick look on what is going on with the gold. As we said, we had this push up. Look at that. After drifting down and going sideways, we've just had really nothing. And then all of a sudden, the gold comes screaming back to life. We've had this huge move on the 4-hourly chart, and then it's just taken. It had to go and take a bit of a lie down after it had that screaming move on the news that resources were required for China utilities, and gold on the back of it just took off. So we still had, even though we had money coming out of that stock market, it obviously didn't go to gold. Perhaps some of it did, who knows, but seriously, we would have seen a much more defined move earlier in the week. It wasn't until Thursday that we had that huge move. It still is just floating around, but if gold does continue, as you can see on the 4-hourly, we've been completely supported for several, 1, 2, 3, 4, 5, 6 4-hour bars. So, that's a good 24-hour reach in there, and it's been completely supported by the 50 EMA. So it's using it as support. If we continue and we get higher than where we closed off around here, and at the end of this week, we've now got a higher low in place on the weekly, which is really important. Do I expect it to continue and go for a nice screaming move right up to 2000? Not at this stage. Anything that I do on gold now will be just on it very carefully. A bit like as Ash said, you just need to be really careful. Take some smaller positions. Gold hasn't played nicely at all this year. It's really kicked up its heels and done nothing it should it's meant to do. I like it when it does what it's meant to do, but it hasn't this year. So we're moving along on gold just quietly and carefully, and if we get that higher close at the end of this week, we've got a higher low in place and hopefully a bit more of a move. But after that, we're coming into later October and November. It just is meant to be all chop and go sideways until it's traditional rally at the end of the year. So that's all I've got on gold at the moment. But Shukri, please share with me what on earth is going on.
Where did it go to? Let's see the seasonal first. It went a lot to Bitcoin and the crypto market. So here is the seasonal volatilities. So, we've been through a very tough August, a very tough September. They call it Rectember. And now it's October, October. So seasonally, it moves up in October. And yeah, this is exactly what it did. Kaboom, there it is. Just October, when October came, it just decided to move up, holding very well during this weekend, because weekend is is usually a month for dumping. Even Ethereum is up. This is the weekly against the resistance. Binance is going against the resistance again, and also AVAX and all the major coins. But the big news today is why I think that this season will really work out, with probably around Christmas being the peak, is this. I think people are now excited, right? Everyone is anticipating the launch of the Bitcoin ETF. Let's go here. So there are like 6 coming up. So the SEC delays or extends 4 ETF deadlines by 45 days. This is important, because if they extend it by 45 days, and the last one is mid-October, actually it's supposed to be early November, this means that we could see something that was supposed to be done here is going to probably end around mid-December. That means around mid-September, around until mid-December, there is some good news to be anticipated, right? And ETF will send Bitcoin up, and there's a lot of approval comings, although I don't see Kathy Wood's application there yet. I hope she gets it. And this also agrees with the seasonality that Bitcoin peaks around Christmas. Just nice for that, Ash. Just super, super nice. It's doing what it's supposed to do. And I think now you see this crypto greed and fear. It was extreme fear, and now it's neutral again, because it's like this. Because of this anticipation of an ETF, there are 6 already being filed. I think there'll be more, and there will be a decision latest December. People are kind of, you want to sell, you are selling to buy back. You're not selling to sell, because you know that an ETF approval could send it up higher. And I think now the other thing is this, because an analyst that did the famous stock to flow model, okay, this is called Plan B, he nailed it. He said that at the end of August, Bitcoin will be 47K, check. At the end of September, it will be 43K, check. And basically now he has targets for October, 63K. November is what? I forgot. November, is it 80 something? I forgot that, but he has it around 135K. So I think people are looking at it, and you will see this thing slowly dialing up. And of course, a good Aussie dollar is also good for the Bitcoin people, the Bitcoin people of the world. That's it.
Thank you very much, Shukri. Did you call me Ash, by the way?
Yes.
Don't do that.
Ainslie, Ainslie. That was Ash.
Don't call me Ash. Love Ash, but
yeah, because Ash likes Cardano.
He does like Cardano. He said it's almost like a cult
Well,
figure.
when it comes this, I always think about Ash. Let's see Ash's Cardano here. Ash cannot wait for Cardano, right? Ada, right? Ada.
I'll tell you what, Shukri. They had the September. What are you laughing at? They had the September conference, and it was a complete damn squib. It was absolutely terrible. But give it time, mate. Give it time.
Give it time.
We that to be fair, mate, that to me looks like a better chart than the others, because it's not a resistance, it's on support. That's a buy zone.
It's on support. Yeah, that's kind of cool. So I think the confidence is coming back, and let's see what happens next week. But again, just note that if you sell, and if an ETF is released, it's going to go up again. And there's 6 now being filed. I expect Kathy Wood to file one, and I expect at least Kathy Wood's one to be approved. Although they're very famous one, like Van Eck has gold, right? Well, Van Eck has applied, Valkyrie. There's another one, ProShares. So it's a lot of big ETF companies. I just cannot see it not happening.
I agree with you, because there's too much pressure, isn't it? Yeah. Too much pressure from people with a lot of money.
Correct.
Yeah. Shukri, I noticed that you actually put the projected numbers up on the screen.
Yeah.
With a tick on it.
Yeah. Check. It means it check.
Mate.
It means it happened. It means it happened. You see what happens in Bitcoin? Let me show you Plan B. They have drawn this model for so long. if this
Oh, he
model
is good,
breaks
Ainsley. I've
down,
got to say,
yes,
Bambi is a bit of a king. He is
yeah.
brilliant.
Who's it? Sorry.
Yeah, if this model is wrong, Ainsley, it's like the end of the world for Bitcoin. I mean, we wouldn't be here. Ash wouldn't be even thinking about Cardano anymore. I mean, that's it. We're retired. Okay, I'm going to show you guys this. I mean, let's go home and do something else.
Yeah.
There it is.
And just quickly, Gary. Yes, go the bunnies. And very quickly, the score is 8-all. Panthers and Rabbitohs. Yeah. So for any of the Aussie contingency, the rugby is moving along. It's the rugby league grand final. Sorry, keep going.
Yeah, there it is. Say August check, September check, October. He expects it at 63, November 98, December 135.
Okay. Well.
Yep.
Okay.
And then after that, it's the end of the world. Ask me next year.
After that, it's the end of the world. Are we still aiming for April, Shukri?
Yeah, we are, but we have to go through a end of the world period first.
Okay. Well, yeah, I'm going to bookend you and thanks, Shukri. Thank you very much. That's really good. And I'm going to be a little bit boring with what's happening in the old oil market because it's been a boring week. So very quickly across to oil. Sorry about this, guys, but at one stage I was so frustrated. We ended up where we started at the beginning of the week. On Friday, we had a bit of a push up, but still within a consolidation box. There's been a lot of, even though we've had oil in demand and there is still growing demand, it's really what we've got here is we're sitting against a traditional, a very strong backdrop for oil to actually go down over the next couple of months. Now, whether it's going to hold true, I knew come September, end of September, beginning of October, it was a bit of a the last of this rally that sort of started in the middle of August and took off upwards and nearly made it to Geoff's favorite level of nearly $77. As soon as it got up to that 76.90 area, as we expected, it was going to pull back. It did open the week, no doubt, a lot stronger than I thought, but we did expect some kind of retracement, some kind of technical readjustment. But as you can see here, and it lines up exactly with the big strong push that we saw up in gold as well. That is the announcement that China made on oil to say their utilities are under a lot of stress. They're coming into winter. They need resources, need the resources quickly. So here we go. We had a bit of a run on the buy side of oil. We've had, Julian has shown you iron ore and coal. Gold's pushed up. These are commodities that we normally see have a bit of a pullback from now down to about the end of November before we see that next precious rally that if anybody knows my trading, I wait very, very patiently for at the end of the year. So what we've got here is an oil market that has gone sideways. They've had a few things thrown at it this week, obviously, with China saying, right, here we go. Australia also have announced that they'll be bringing their international border lift. The restrictions for international travel are being lifted a month earlier than anticipated. Our vaccination rate has certainly moved along at quite a clip, which has meant that as of the 11th of October, which is Monday week, New South Wales is looking at coming out of more restrictions. I wouldn't say full lockdown, but we will be at 70% double dose. When we get to 80% double dose, they will be lifting the international flight restrictions, and that will obviously put demands on aviation fuel, etc. So we've got a few factors coming into play over the next couple of weeks. One, economy is opening up, particularly Australia, but it's the China story, and whilst we have done a fabulous job of ticking China off just recently with building some nuclear submarines, we did a really good job with just upsetting a few people around the world, but go big or go home, I guess. I'm just going to see how this plays out. As I said, we need to be really careful coming into this level as well. If you just have a quick look around that $76 to $77, as Julian showed as well, that coming into that area. Yeah, we're looking technically with a double top, but we've got some fundamentals that I think is going to throw a bit of a curveball into what is going to happen, what we expect to happen coming through for us. So eyes on the ball. And let's just see what happens, shall we, with oil coming out this week. It's had a rough week this week, just going nowhere fast, spinning its wheels. But yeah, going forward, let's just see. Okay, that's me on oil. Lloyd, are you around, buddy?
Yep, I'm around.
Great. And I'm going to throw it to you on your market strengths.
Right, evening everyone. So let me go through. Okay, the first off my list is actually the DXY dollar index. Yeah, it's pretty bullish. Thank God I caught a few pairs from this last week. Yeah, so for this week I'll be waiting for some sort of retracement. Then I'll be good to go in for DXY for another long. How strong it will be, I sincerely don't know. I mean, I really hope that it can go up to 100. That would be a really good trend, right? But oh well. As long as the setup happens, I will just stick the right. Yeah. Next is actually Canadian index. Now Canadian index, although I rank it as second strongest, I do think that it has the potential to actually go even stronger, supersede DXY, simply because I think of the China story again. So oil is going to be in huge demand. Energy crisis back in China. I wouldn't say crisis, energy demand in China. So with the rise of oil, possibly CXY is going to also rise with it. Yeah, so if I get into any good position, then I'll possibly be holding it for the even longer run. Yeah, so that's just my game plan. Now for the Japan index, interestingly, for this level at $90, you can see that it actually bounced off several times. Yeah, so it has the potential. I have to make it very clear. It has the potential to be bullish, really bullish. But so far, it has yet to demonstrate that it is. Yeah. But for any trend traders that wants to get in early, I would say that the Japanese currency index is worth taking a look at. Kiwi and Australian dollars. Now, I wouldn't say that they are usually for the fourth and fifth. I'll put that as a middle of nowhere, but they do display some sort of direction, but just that they are right smack in the middle of a channel, which I don't feel comfortable trading at all. Yeah, but the dominant direction for these two is actually to go short. Yeah. I mean, they might not necessarily go up to the top of the channel. I don't even for myself, I don't really trade a channel. But just gonna say that really price is in the middle of nowhere, but their dominant direction is to go short. So if you find any good setup to go short for these two pairs, then yeah, why not? But my sincere advice is not to put in too much of a risk. British pound, again, range, false break. Now it has remained in the lower part of the range for quite some time already. This is really a strong break of this horizontal level. I'm just waiting for some sort of a lower high. I'm good to go into for DXY. Swiss. Now Swiss is actually pretty much in the same territory as yen, not yen, the Kiwi and the Aussie. Yeah. So dominant direction is short, but I'll still be very careful trading them. Just that this is in a wider movement, so I might have more latitude in trading it. And the weakness of my bunch, I would say, is actually the opposite of dollar. That would be euro. So you can see that again, very strong break of the horizontal level. Waiting for some sort of retracement. That will be cool to actually go in for a short. Now, with view in that, then euro dollar will be something that I'll be looking to trade short in the upcoming week ahead. Now, currently price is at the top of the. I wouldn't classify this as a range, but if I have some sort of a false break, I'll be keen to go for a short. Otherwise, the usual setup applies. A break and retest, I'll still go in for a short. And then CAD Swiss, this is a bit more messy. So you can see that price is at the top of the range. If it comes down against anything like a false break, I'll be keen to go for a long. Otherwise, a break and retest. So these two will be the currency where I'll be watching closely for the upcoming week ahead. Interestingly, usually I don't talk about commodities, but I can't help but go into silver. It seems like a good pair to trade at the moment. Yeah. Now, this is the Batman pattern. So now this actually, what really caught my eye, this is a bit of a joke to me, is that wherever I see such a strong down move and such a strong recovery, which it has actually happened several times in the past, I'll be keen to actually trade this pattern. I don't really know what this pattern is called. I'll just call it Batman Batarang. Yeah. So why I'm looking forward to this pattern is, look, if you look at the past, something similar did happens. Yeah. So I'm just waiting patiently for price to actually come back to test the horizontal level or trend line, whichever you can mark out in the chart. I'll be keen to go long. Such pattern, I don't know. It doesn't seem to happen a lot in the currencies, but for the commodities, it does happen quite a fair bit. Even in the past, I mean, I'll just highlight the prominent ones. Yeah, something like this. You can see that we can call this a double top, years or whatever that is. But wherever that happens, then yes, I'll be very, very keen to wait for this really scream for patience, because you need to see price goes up, come down, goes up, come down, basically a retest of horizontal level. Then it seems like price have a good chance of taking it off. Yeah, so that's my take for silver for this. Yeah, I don't think it happened for the next coming week, but for the next upcoming month, which is October, keep a lookout for these playouts. Yeah. So essentially, I'm just waiting for a higher high, and then coming back to the same level. I'll be keen to actually place any trade here. So let's keep a lookout. Let's see if this Batarang pattern plays out. It's more of a fun trade to me, but I do observe that such a strong sell and a equally strong buy coming back into play. It does indicate that there might be a very strong movement up here. Yep. So that's all for me for this weekend, and with that, I'll pass it back to Ainslie.
Thanks, Lloyd. Just looking at those setups, would you, I reckon Ash would argue that would be an inverse head and shoulders there. With an extra bump, maybe Quasimodo. I don't know.
I mean, sure. It could be an inverse head and shoulder. I'm just painting it, trying to draw the artistic side out of the fourth chart, technical trading.
I just like, I like to call this this is a bit of fun to trade. Okay. But yes, humor. I enjoy your humor. But yeah, you could almost say it is an inverse head and shoulders, and
it could be.
Yeah, it could be.
I'm just trying to make it as abstract as possible.
It's got Lloyd's stamp of approval all over that, hasn't it? So, Lloyd, thank you very much. That was really good. Thank you. Next, we would normally have Uncle Geoff, but Uncle Geoff is not here this evening. So he has already sent a pre-recorded message through, and I'm just, if you could start that for us, please.
Hello everyone, slim pickings this week on the game changer bars, but let's have a look at them, shall we? First up is this one, Euro Kiwi, and suggesting that this big reversal bar off the monthly pivot, which of course is a game changer bar, is going to send the market down at least towards this area, but there's not much reward in that if you're going to take that much risk. And there is another support level just below it as well. So I think I'll be not taking this one. To actually trade it, you'd want a fairly decent pullback, I would have thought. And it's just not interested. In fact, I think I'd be rather going the other way if I got a higher low in here. So Euro Kiwi is not one that I'll be looking to trade this week. The next and only other is Euro Yen. And of course, we do have a game changer bar here, but we had a game changer bar last week, and we had one the week before as well. So this one's all over the place, and very, very difficult to predict as to which way it's going to go or break out of this range that we're currently in. Again, same story as Euro Kiwi. I think the downside is limited here until we break through this level, then come back and retest it. Then I'd be interested in going short, but not at this point. That brings me to the 3 charts that I'm interested in this week. Not game changers, but the Aussie yen is first up, and I do qualify this with saying that we do have an RBA statement coming out on Tuesday. So the best case scenario, I think, for me is if I do get into these trades, I'll get into them tomorrow at some stage and hopefully be free trading by the time the RBA statement comes around. Now, this too is a little bit tricky in that we've had a high test bar followed by a low test bar. If I have a look at the bigger picture on this one, if I go to the monthly chart, I can see very, very clearly that we've had a breakout of this 80.27 level. We've come back to the top side of this trend line, and the course of least resistance appears to me to be back to these highs. Now that's the monthly, that is the monthly chart. The weekly chart is telling me another story, and we do have resistance dead ahead. So that's a little bit tricky, but I do see or spot a little range that we've come to like in here. A little bit of consolidation in that range prior to the high as well. So I think if I concentrate on that area, and I can see a lovely little target up here, then perhaps on the smaller time frames we can look to get a trade in here. I want to see a pullback, however. I don't want to just enter at the top of that bar, but a pullback on the smaller time frames does look to be interesting to me. You might even have to go down, to 4 hour or something like that to get into this tomorrow if you so choose. But I think the course of least resistance, as I said, is long, and if we can get in here and the RBA plays the ball, we could get a decent run off Aussie yen long. I was actually in this short last week, but I have changed allegiances, so I'd love to see a monthly pivot test and something like that sitting there. Then that would be eminently tradable for me. Aussie Swissy, not dissimilar, but again, I see a bigger picture that suggests to me that this one's going long as well. Looking at the daily chart at the moment, the bigger picture, as I said before, is, well, on the monthly chart it's not that clear, but on the weekly chart I do see this rejection of the monthly pivot. That's a bar I do like to trade, and I think that was eminently tradable last week. Didn't trade it, however, because the reward wasn't there. I don't think the reward's that great. But if I get zoom in a little bit further, I think you can see a trend line coming down here as well. I'll put that in. And if that is broken and retested, particularly if this high is taken out, I think this is off and running. Already we have the look of, in my mind, a higher low in here. Maybe that was tradable last week. I didn't trade it. But the pullback here is interesting. I would like to see on the daily charts a pullback to this trend line here. And then I think that would be eminently tradable once again. The problem is that will run us into Tuesday, and that will be the RBA statement. So I'm probably looking to pick it up on a smaller time frame, 4 hour. If I get a pullback here now, that would be interesting to put an entry above it. But you've got to take on these highs, so it will be a little bit tricky. But I'm dead set keen to get long here, both the Aussie on the yen and the Swiss. CAD yen is the final one that I'm looking at today, and this is pretty clear that we are in a range. That's the daily chart. The bigger picture is telling me probably quite the reverse, that this looks like it's going long, and that's fine. In the longer term, I'm quite up for that, but in the shorter term, I think this range in here is telling me everything I need to know. These highs over here are very much a part of that picture as well, and I think that range actually extends over this side of what maybe is a head and shoulders. Getting long in the tooth for that, but this resistance area is attractive, and if I can find on any chart really, daily looks very, very interesting with that tweezer top sitting on top of that range. I think maybe a test of the monthly pivot would be interesting. Then we came back and put in a lower high. I think I'd be dead set keen to go short CAD yen. A lot will depend on the OPEC meetings, which are taking place tomorrow as well, as to which way this one goes, because the Canadian dollar is very much related to what oil does. So there you go. I'm looking for a short CAD yen, long Aussie Swiss, long Aussie yen, and I think they will be the ones I'll be concentrating on during the week. Just need a little bit of help from the market or from price in the early stages. That for this week is my 2 cents worth.
And thank you very much for that, Geoff, even though you're not here. I hope you've enjoyed the presentation this evening, everybody. Stay safe during the week and happy trading. Have a great week, everyone. Bye for now.